Hey guys, welcome to this week's Swyftx Squawk with me, Pav, lead market analyst here at Swyftx. And the drama continues. We've seen some massive news overnight out of the US with Donald Trump going back against his tariff plans. This is something that potentially the market wasn't seeing coming so quickly and so soon. And as a result, we've seen prices take a bit of a hop and a skip overnight. But what we have seen quite plainly is the tariffs being put into a 90-day pause for certain countries that are willing to negotiate with the US on these trade agreements, but we're still seeing those that are refusing to come to the table have the pressure kept upon them. And most specifically, the biggest trading partner with the US is China. We've seen Donald Trump reinforce his stance with this trade war, doubling down in his aggressive nature from 104% to 125% tariff now applied to China. These tariff changes also come after the fact that China has been reaching out to the US to come to some sort of agreement. So again, whether or not some sort of art of the deal style aggressive stance is being put on here by Trump, time will tell. But it definitely seems there's some big shifts underway right now. Treasury Secretary Scott Bessent had this to say to media about the news and about China. This was his strategy all along, and you might even say that he'd go to China into a bad position, and they responded. So some pretty firm words there from the Treasury Secretary, and it really starts to beg the narrative now. Is this done? Is the trade war put to bed? And while the markets have obviously taken this news very positive sense so far, it just opens a door to a few more questions still, in my opinion, whether or not the US and China will be able to see eye to eye. Obviously, the current situation that we're seeing unfold, a lot of the ripple waves that we're seeing throughout the global economy is based upon this trade dispute between the two major superpowers. So with that being said, we're going to go through some short-term data and long-term data and help cover what might be worth looking at next to understand what to anticipate for crypto from here. So firstly, the major question we're all asking, is this a sustainable rally? Now, what we did see with the market move overnight was a massive vaporization of bears in the market. So short positions, we saw quite a bit of damage to the tune of $374 million worth of short side positioned market participants taken out. Now, when these positions get unwound quite quickly in this manner, we tend to see very rapid price movements. So at the same time, while we might have seen this exaggerated move in the market, time will tell us, I believe, the next couple of days, whether this was just a quick deleveraging of those expecting more downside, or was it really a true demand-driven rally? And to put things also into perspective, a failure to really see this demand kick in, particularly overnight when we're moving into the second session since this big news announcement, it's definitely going to give us a good read on what's the sentiment of the market, what's the confidence in seeing if the price can be held up at the levels that we're currently seeing. Now, in terms of zooming out on Bitcoin and looking at its performance away from just this myopic moment in time and zooming out to a more macro lens, another good way that we can look at the whole situation right now is where is Bitcoin on its time-based roadmap when we measure it from the halving. So this is a particular chart that basically has a starting gun for the halving, which if you're not sure what the Bitcoin halving is or how important it is or why it's important, I recommend you go check out our Learn article on it. Within a few minutes, you'll be a pro and feel very comfortable with it. But essentially it breaks up network milestones to year-by-year trends. And the orange line here is where we are today. And there's a few points that we can take away from the data. Namely, we can see that over time that the returns for Bitcoin, it is diminishing. It gets less and less each cycle. But there's also a very clear caveat, what we can see from the data, that between days 400 to 600 since the halving have been very significant in terms of price milestones for Bitcoin. They usually are the windows in which we do see the market cycle tops being made. So that's not to say that's what we should expect this time. But again, looking back at the history of Bitcoin and past cycles, where we have seen other major macro catalysts as well, such as the Ukraine conflict, such as the inflation crisis in 22, and even also the COVID crisis in 2020. There have been also major events on the calendars in these previous cycles too, but we still have seen the markets perform. So whether or not we're still early in the innings, right now we're only just approaching that 400-day milestone for Bitcoin. But that's it from me here today. We'll be back again next week to clear things up, see what the lay of the land is. Catch you guys next time.